Hello, traders. Welcome to this week's Stock Profit of the Week update. We are going to discuss Nike, NKE, stock. Why do we see Nike, NKE, stock as the profit of the week? As we head into Nike's fiscal Q2 2025 earnings, there's a fascinating dynamic at play. While analysts are expecting a slight beat on earnings at 67 cents versus the street's 65 cents, Morgan Stanley is raising some red flags. They're telling us this potential outperformance might not be what it seems. Think of it as making the numbers look good without the underlying strength you'd want to see. Now, let's talk about what's really happening on the ground. Nike's facing a perfect storm of challenges. North American sales down. Chinese demand weak. And here's where it gets interesting, their direct-to-consumer transactions, usually a bright spot, are declining. Add to that an inventory situation that's forcing them into more promotions than they'd like, and you're looking at Morgan Stanley projecting a 10% sales drop year over year. That's even worse than the street's already pessimistic 9% decline forecast. Enter Elliot Hill, Nike's new CEO, and this is where the plot thickens. The company's at a crucial crossroads. They've got these immediate fires to put out with inventory and sales, but they also need to chart a course for the future. Investors are showing some optimism about Hill's potential to shake things up, but right now, it's a bit like trying to change the tires while the car is still moving. Morgan Stanley's not sitting on the fence here. They've dropped their price target to $80 from $82, and their message is pretty clear: recovery's going to take longer than people think. While the stock seems to have found its floor, thanks to some hope around Hill's future strategies, analysts are keeping their expectations firmly in check. Looking ahead, Nike's playing a high-stakes game. They're juggling inventory issues, trying to revive sales in key markets, and walking a tightrope on promotions to protect margins. The big question isn't just about the next quarter, it's about whether they can pull off this balancing act while laying the groundwork for long-term growth. For investors, it's going to be crucial to watch how Hill and his team tackle these challenges in the coming months. Now, it's crucial to examine how the technical analysis has informed us. So let's go to the chart now. Let's take a look at Nike's daily chart, ticker symbol, NKE. The stock is currently trading at $77.23, showing a consolidation pattern below key resistance levels. Price action has been relatively range-bound since November, with the 20-day moving average, red line, acting as dynamic resistance around the $77.50 area. Looking at the indicators, Nike is trading with the stochastic oscillator at 40.51, indicating neutral momentum in the current range. The price has been making lower highs since September's peak near $89, while finding support around the $73.23 level, forming a descending channel pattern. Current support levels are clearly established at $75.12 and $73.23, with the latter being a critical level that's been tested multiple times. Key resistance zones sit at $79.26 and $81.30, where previous rallies have failed. The upcoming earnings report could serve as a catalyst for breaking out of this range in either direction. If Nike surprises positively with earnings, watch for a break above $79.26, which could trigger momentum toward $81.30. However, given the recent analyst downgrades and concerns about sales growth, traders should be cautious of potential downside breaks below $75.12, which could accelerate selling toward the $73.23 support. As always, make sure to manage your risk effectively before making any trades, particularly ahead of the crucial earnings announcement. That's all for today. See you in the next analysis video.